Hey everybody, Economic Ninja here. I hope you're doing well. By the background, you know we're talking real estate. Guys, there is so much happening in the real estate market. And I'm going to bring you 5 different facets of different opinions from the home builders to Wall Street to the mortgage industry. There's so much going on. We're going to talk about it all. But I have to say, every time I hear the phrase, we're in a housing crisis, it's like people just literally listen to the mainstream and go, we're in a housing crisis. And I go, what, was there a baby boom that I didn't know about? What, did all of a sudden everybody get rich and all of a sudden can buy a house? No, housing prices are going up and it seems like it's hard to buy because inventory is collapsing. That's because people are actually getting poor due to inflation. If you saw the video that I did the other day on if you price homes in inflation, you'll see that a crash is literally already started. All right, guys, we're going to start right here. Let's do some screen sharing. All right, here we go. So we're going to start, I'm going to jump around all kinds of places, okay? But we're going to start here. Home builder confidence in the housing market is waning. This is from NAHB and Wells Fargo. This is the housing market index. This is looks really cool. Came down, came back up. Now she's coming back down, right? Here we go. Home builder confidence in the strength of the housing market is beginning to wane despite rising home prices. That's crazy. That's what we've been talking about before. Home prices have nothing to do with the relative strength of real estate market. I want people to understand that, okay? What's happening? The National Association of Home Builders / Wells Fargo Housing Market Index dropped for the 3rd straight month to 79. Guys, we have been talking about this for quite some time. That's the lowest reading since September and the 3rd lowest since 2020. And guys, remember, we're coming into the spring. Said now here, the NAHB attributed the decline to several factors, including shortages of lumber and other materials and an expectation of higher interest rates. Now that one right there is the key, okay? And we want to talk about that. And I want to, in the end of this video, I'm going to talk about how people like to demonize real estate professionals. And I think that is very interesting. We'll get to that in the end. Okay, right here, out of Market Watch, it states housing starts climb, but home builders are growing more cautious with new projects. All right. So now, again, guys, housing starts obviously are climbing because housing starts take some time to get going. It takes some time to identify the property, get the financing for the property, get the permits for the property, and then break ground. Okay. Housing starts start with the actual permit process. And like I've said before, new construction is a lagging indicator. Okay. Because by the time, a real estate crash happens, like we saw in 2008, home builder starts building up homes and trying to rebuild after his collapse of his company. A lot of companies collapsed, all right? A lot of construction companies collapsed during that crash. By the time they start getting some momentum, they go, okay, let's go for it, right? Let's go for the big money. Let's get the loans and start projects. By then it's usually time for the housing market to crash again. So it is a crazy, crazy conundrum we're part of. And like it says right here, housing starts climb, but home builders are growing more cautious with new projects. Well, let's talk about that. The reason why they said it, I completely blank. There's so many articles right here. Here we go. It says, I'm not even gonna get to that part. My point being is this: housing builders, home builders are starting to stress out about the construction industry because they know that not everybody can afford a house at these super high prices. And we're going to get into that because I have mortgage data that quite frankly is going to blow your mind. But before we get into that, we're going to have a message from our sponsor. Have you ever wanted to diversify your portfolio and invest in art? Well, I just did. I like to call this one Ninja on the Water. It's contemporary. It's mellow. I love it. I hope to get a great rate of return. The fact of the matter is, I found out of a new company called Masterworks. Masterworks has figured out a way to allow people to invest in real art, real contemporary art, and nothing like the one I just invested in here. We like to call this one pizza in a pizza box. I know there's not a lot of pepperonis, but there's a lot of inflation going on. Fact of the matter is, guys, art has done very well. Contemporary art from 1995, I believe, or 1994 till 2021. Contemporary art has outpaced the S&P 500 by about 164%. But the thing that's kept a lot of people away from it is the fact that not a lot of people have the budget for one piece, let alone multiple pieces of art, and they don't know how to identify good art, how to properly store it, how to insure it, and then how to sell it. Masterworks has figured this out. Masterworks figured out how to put together a team of amazing people, art professionals, that go out, identify art, purchase art, then they securitize that art through the SEC. After that is done, they then allow investors to not have to buy the entire piece of art. You can actually buy a fractional share with as little as $20 per share in a painting or piece of art. The most amazing part about that is you now don't have to buy the entire piece, store it and figure it all out and insure it, but you can also diversify your art portfolio amongst fractional portions of many different pieces of art. I think that's awesome. Paintings like from Banksy, Warhol. I mean, look, I can't even name off all the artists, so that means I probably shouldn't be buying it. Now I get it. Things like this are really fun. And I got a smoking deal. The guy on the corner of the street gave it to me. But the fact of the matter is, it's probably not going to make me the rate of return that art from a company like this will do. The reason why is because they are not only the professionals in the game, but they also share in some of the profits. And that is very important. Their job is to bring you an amazing investment that will appreciate over time because they also get a piece of that profit. So think about this. I'm going to put a link to Masterworks below so that you can actually check it out, give you something to mull over and diversify your portfolio. Okay, guys, so check this out. We're talking about mortgage rates. Mortgage rates are very important. We talk about that because as mortgage rates rise, less and less people can afford that priced home. And especially in a time where home prices are accelerating, the last thing a home buyer wants is mortgage rates to accelerate as well, because if they do, it costs more money to buy the house. So right here out of Market Watch, rising mortgage rates are no doubt a headwind for housing demand. Mortgage rates soar above 4% for the first time since 2019. Now, I think that's very, very important because before 2019, guys, the world wasn't like it is today. I want people to realize that. And remember, I've talked about where mortgage rates were as opposed to where the banks were, where they weren't trusting each other during 2019, and the interbank lending rate started to skyrocket because banks weren't trusting each other to be able to pay back their overnight loans. That's when the Federal Reserve had to move in and start taking action. And then all of a sudden, about 4 weeks later, you saw this amazing, sorry, I had a sniffle, happened for like 2 years, completely shut everything down, right? So this is a very, very important part. So it's official, the mortgage rates soar above 4% for the first time since 2019. That is going to put even more pressure on the housing market. Now, if you look over here, and guys, I'm going to link all of these articles for you to check out because the last thing you want is the ninja to read to you, because I don't know if you paid attention, but as a ninja doesn't read very well. Here's how the Fed rate hike could impact mortgage, all right? It says the Mortgage Bankers Association expects mortgage rates to rise to around 4.5% over the next year. Well, let me ask you this. If you've been watching the mortgage industry or the rates from first week of December, which they were 3% for a normal everyday 30-year fixed, to now at 4%, we have seen interest rates increase about 33%. So here, Mortgage Bankers Association saying 4.5% over the next year, that's weird. So it slammed up 30%, 33% in the last, let's say 90 to 120 days. And now you expect us to believe with rising inflation exploding everywhere and the Fed saying they're going to raise rates up to 6 times this year at 25 basis points each time, which equal 1.25%. Wait, bad ninja math, 1.5%, if they can pull it off, which I don't think they can. Yeah, mortgage rates are going to end up at 4.5%. No, that's actually not true unless we have a crash and the Fed turns around and starts lowering rates again. So I want people to understand that these guys, the big boys on the block, they're not always right. And if they are, then it's just luck. All right, guys, I want to close with this. And this is very important and very telling. Real estate sharks attempt to flip, oh man, you pop-ups, Florida condo for $13 million after 1 month. Now, guys, first off, the world loves to demonize people when everybody else is hurting, right? And so they see these two guys. I haven't even read the article. I'm going to leave it for you guys because I don't even care because I already know the premise of it. They're going to sit there and go, these guys bought a house or a condo at X and now they're selling it at X times 10. And this is horrible. They're just taking advantage of people. Well, first off, what kind of people do you think they're taking advantage of at that kind of price point? Come on. And honestly, what happens if they're wrong. Now, if they're right and they sell it tomorrow, then they were right and they're heroes because they crushed it and they saw an opportunity that nobody else did. And that's what I hope for Ninja Nation. I want you guys to be prepared and not scared and be ready to charge the mound when everything crashes. We're going to buy up everybody's stuff. And yeah, there's going to be people ticked off, but the truth is it was because you were prepared and you weren't partying and going and getting into crazy debt and doing stupid stuff during these times. You were preparing. The facts, though, is everybody likes to demonize somebody, and this is the case right now for people buying a Florida condo. Now, guess what? What happens if it doesn't sell? Well, then they have to lower their price. It's called the free market. That's what's amazing. There are suckers born every day, and I don't know if you've paid attention, but there's some of them buying homes in places they shouldn't at insanely high prices. And those same people are telling me there's a housing shortage. No, there's not. There wasn't some crazy war that led to a bunch of people coming back from war and creating a baby boom. There was no increase in population. There was no massive increase in wages. There's no reason for a housing boom. The only reason is the masses finally started jumping in, and then the people left over, the really slow sheep, they actually finally decided to buy a home when interest rates were low but going higher, and they got too scared and they FOMO'd into real estate. Those people also existed in 2004. I know some of them. They actually left their home even though they didn't lose their job and said, why would I pay this mortgage? My house isn't worth that much. And now they just got back in. You think they would have learned, but they don't. So my point being is this. There is nothing new under the sun, everybody. Their real estate goes through cycles. This one just happens to be a big one because it's a currency cycle that we're dealing with. So when you take all this information in, guys, just remember this. We want to be prepared for the most epic collapse in world economies in history. When that can happen, we don't know. Is it going to happen? Yes, it will. Just know this. If you're waiting for your dream house, we all are. I want a much bigger house. I want a floating house, actually. So something on the lake. Nothing fancy, just like 10 bedrooms and 55 garages. I'll let you guys guess what kind of cars I want to put in the comment section below. So with that being said, I thank you so much for watching. The Economic Ninja is out.